Welcome back. You're watching Business Morning on Channels Television. Our conversation on the program today starts now, and we're looking at expectations from the CBN's Monetary Policy Committee meeting, which ends today in the Federal Capital Territory. Of course, we know that there have been different views from various experts and market watchers as regards what the MPC should be looking at doing at the moment. We're talking about it today. On the program with me is Boyo, who's an economic analyst, and Gabriel Idahosa, who's also an economic analyst. Good morning, gentlemen, and thank you so much for coming in.
Good morning. Hello, Ari.
Well, Mr. Idahosa, let me start with you. It's not something that is totally far-fetched, although a lot of people actually are expecting that it should happen. There should be a change in the stance of the Monetary Policy Committee based on what we have right now on ground. But looking at domestic and international factors, variables at play, what are your expectations? Are you also expecting that the Monetary Policy Committee will shift?
Well, not so much a shift of policy as to activating some elements of the policy that needs to be activated. The former governor had a much more clearer policy stance. He was just going to fight inflation, keep the foreign exchange steady, and he wasn't too committed to any specific process of contributing to growing the economy. He was going to fight risk and keep the variables pretty steady. But the new governor has committed himself to an extension of the policy framework to say, I'm going to contribute to economic growth, I'm going to pursue employment as part of the package of policies. That makes it much more complicated for him. And since he started, he has tried initially to try and make some changes in that direction, but the market quickly sent him back to where we are today, to a very, very tight monetary situation. And you won't see the CBN moving away from that very quickly, even if they wanted to. So we expect the tight money situation generally to stand. And the question is how tighter he can go. With MPR at 12 and manufacturing, the real economy not really be able to borrow at 22 when you have MPR at 12. So the CBN is sort of constrained in that direction. So the only way to look at now is the exchange rate. And we say, well, perhaps I can't keep the rate at the band anymore of 150. I have to loosen it up and move up. So that's where we are probably going to be looking at for the CBN. And then, of course, the little window of the CRR that is left with the 25%, probably take that off and go to 100.
That's on public sector deposits.
Yes.
Well, Mr. Boyo, do you share the same thoughts? Do you think that maybe at the time that Mr. Emefiele took over as CBN governor, he should have changed the policies a little bit, shifted from where, Mr. Sanusi Lamido Sanusi left off?
Well, quite honestly, I first do not share the belief that Sanusi Lamido Sanusi was not so much committed to also growing the economy. I think he found that it was impossible for him to do so. And unfortunately, he also failed on the other areas of price stability, which usually determines how the central bank would be judged. In other words, as Mr. Idahosa has said, the issue of 22% cost of funds to the real sector is not new. It didn't come in Emefiele's time. It has always been there. The rate of inflation has never been best practice, even before Sanusi and even during the period of Solido. So basically what I'm saying is that this is a continuum of the maintenance of a policy that is unfortunately, regrettably designed to make us poorer, especially when we get richer. The Monetary Policy Committee is only relevant, is only important so long as it can influence three indices. And these indices are as follows: the rate of inflation, the cost of borrowing, and also maintain not just simply exchange rate stability, but stability of the naira at a rate that is conducive to drive the economy. So you have the utility of the MPC meetings for the past 200 times or whatever, totally dedicated to the provision of three things: an enabling environment that guarantees that inflation would not be more than 1 or 2%, as happens in successful economies everywhere; that cost of funds would not be more than 6 or 7%, with special reference to agriculture and power, which could have 1 or 2 or even 0% cost of funds for agriculture. Okay? The reasons for this are quite simple. If you have cost of funds being maintained at 22% because the central bank's monetary policy rate is recklessly high at 12%, in an economy where you have a huge rate of unemployment and a comatose industrial landscape, what is required are low cost of funds to be able to ginger entrepreneurs to take advantage of the opportunities in the market. But unfortunately, you would find that there will be no opportunities, or there will be less and less opportunities to take care of if inflation is galloping at 8% or thereabouts. Consequently, you have a situation where an 18,000 naira minimum wage earner 5 years ago would not be able to cope with that same 18,000 naira, because over 5 years, he would almost have lost 50% of his purchasing value. So that shows you why the poor has been getting poorer, and the rich, unfortunately or fortunately for them, have various opportunities to line their pockets, like the area of fuel subsidy payments, for example.
Mr. Boyo, let me come in here. What if, for instance, now with the scenario that you've painted, all right, in the last 5 years, minimum wage has been at 18,000 naira. There's been a difference in the market. So many things have changed. What you could purchase with 18,000 naira 5 years ago, you can't do that
Absolutely.
now. And at that time, the CBN had begun to tend towards ensuring that there was tighter policies to ensure tighter monetary stance in the economy, so to speak. Now, for any reason, like Mr. Idahosa actually mentioned it, that there might be a further tightening. If there is an option of hold on, stay on the stance that we're on, retain NPR at 12%, CRR on private sector deposits at 15%, and CRR on public sector deposits at 75%, then what?
Well, I would be, put this way, I would be amazed if anything changes, okay? Because the gentlemen who compose the Monetary Policy Committee and the central bank itself have been patently confused for over 15 years. Like you rightly say, we shouldn't be talking of MPR of 12% in an economy where there's so much joblessness, in an economy where industries cannot function because of cost of funds and infrastructural deprivations, okay? So you see, your assumption that, oh, should they maintain, means that there is a gap somewhere in the Nigerian consciousness about the utility, the social utility of having a monetary policy rate of about 12%, okay? It does not make sense for the central bank, monetary policy committee, or whatever agency to set a monetary policy rate of 12% and blame the banks for not lending to the real sector. If the banks have a free ride of making money on a monthly basis, because as Mr. Sanusi himself, His Eminence, the President Emir of Kano himself said, we have, or they have, sustained a system which makes the banks richer at the expense of the poor, because he said very, very clearly that what a wonderful strategy that the banks have been enjoying, that the Nigerian government puts its money, its deposits for free. I didn't say this, even though I've been saying it for 12 years or so before eventually cottoned onto it, that the Nigerian government has been putting its deposits for free in the hands of the banks and borrowing it back. If that is not fraud or a scam, I don't know what is. And that scam, unfortunately, regrettably, painfully, has continued for over 20 years. How you can, as a country, expect to grow when the people who manage your economy are comfortable with borrowing money they intend to keep idle at 12% or thereabouts, and then turn around and blame the banks, and then say also that the real sector cannot grow because the banks are not lending. Who is responsible for the banks not lending? And I am also amazed that to a very large extent, the media particularly appears to be in connivance or collusion in trying to deceive the people, because you in the media don't seem to capture the reality of what the Central Bank and the Monetary Policy Committee is doing when they tell you that they mop up. All media agencies, whether print, radio, or whatever, they all invariably, gleefully announce how Central Bank is helping the banks to manage their economy by mopping up excess liquidity, whereas the implication of mopping up excess liquidity is an oppressive tendency to kill the economy. Because how can you praise a system where your own government, how do you intend to grow? How do you intend that the poor will revive from that level of poverty? If your own government is willfully, deliberately borrowing money it doesn't need at 12%, only to keep the money idle, and then lament the fact that the real sector is not having funds, and then puts his hands high up and say, look, there is excess. How come there has been excess liquidity in the economy for over 10 years? Where does that money come in?
Mr. Boyo, hold on to your thoughts. Mr. Idahosa, could you quickly react to what he said? You know, because it really is an issue that's been debated for quite a while, and Mr. Boyo has been one of those who's actually championed that debate. Why does it always seem to be the way it is? So at the end of the day, the stance that the Monetary Policy Committee wants to take at this time, even though we know that the CBN governor actually said there wouldn't be any change until the elections next year, but because of recent developments, this has had to happen, and then also in light of what Mr. Boyo has talked about.
Well, I was very interested in hearing Mr. Boyo, because he simply validated what I said. You know, I started by saying that the previous governor of the CBN was very open. He really wasn't committed to growing the economy.
This one actually said when he was coming in that he wanted to grow the economy.
Yeah, but everything Mr. Boyo said is what had happened. And the body language of the former CBN governor was clear. His issue was, I want to keep the currency steady at 150. I want to fight risk. I want to fire any banker who cannot manage risk. And that was it. You didn't have the kind of commitment to growth. Look at what happened in America when they had a recession. See how the CBN, the Fed, you know, went straight into the economy, and the massive type of action that was taken. You didn't have that kind of action. So the people especially in the monetary policy part of it, they are not looking at growing the economy the way Mr. Boyo, you know, is talking. They are looking at keeping the playing field level and easy for the big boys to be able to play, for people to be able to save money. If you have a lot of money, you save it to get 10%, even 11% if you put a lot of money in the bank or you buy treasury bills. And, you know, all that does not have anything to do with the poor. If you are poor, you are not thinking of having money to put in treasury bills. So, you see? So the whole system was simply not committed to growing an economy and creating jobs.
Okay, now still in line with what Mr. Boyo said, he said that he talked about keeping the Naira stable. That's one of the responsibilities that the Central Bank of Nigeria has. And even you also mentioned it, how Mr. Sanusi also said that, you know, basically this is what I want to do, keep, you know, the Naira stable, ensure that inflation rate is at a certain percentage point, and also ensure that the cost of borrowing doesn't get out of hand. But we noticed that even yesterday, the Naira was selling at 162 Naira to the dollar at the official window. So that means there's been a serious drawdown on the external reserves. As of this morning, it was $37.17 billion. Is the CBN still keeping in line with its requirements as a regulator?
Well, I think the point is that at some point, you know when you can't play the game anymore. The game of keeping all those variables at that level, so that, as Mr. Boyo has essentially said, and we are saying, so that the big players in the economy can stay there. Those who can borrow at 22% and still make profit can do that. Those who have a lot of money can put it in treasury bills and earn 12%. That game is getting out of the market. the party is getting over because you are selling your oil at 70, it's going to go down to 60 very soon. CBN can no longer do with so-called monthly defense or weekly defense of the naira, because you're going to just wipe out your foreign reserves in a short time.
So, Mr. Idahosa, hold on to that thought, and Mr. Boyo, hold on to that thought as well, because when we come back, we're going to start talking about another aspect. I know that a lot of market watchers have been talking about the devaluation of the naira. Is it time for the naira actually to be devalued? Well, hold on to that thought. You're watching Business Morning on Channels Television. We'll take a quick break, and when we come back, we'll continue our conversation. We're looking at expectations from the MPC meeting, which ends today. And of course, I've been having a conversation with two economic analysts, Henry Boyo and Gabriel Idahosa. Both gentlemen will be here with me in the studio when I return in a moment.